Hey guys, welcome back to another video. Today we'll be doing an analysis on Dollar Tree. So as always, I want to start off with the PE ratio. So the current PE ratio is a 20.89, which is good because the goal is to look for companies with a PE of about 20 or less. This is something important to look at because it shows how risky the investment will be. So of course, the last thing I want to look at on the overview is if they offer a dividend. So they currently don't offer any dividends, which is fine. They would rather reinvest the money back into the company. So getting into the income statement now, I want to look at their revenue. So as of the most recent year, they're bringing in about 25 billion, which is up about 5 billion from what they had in 2017. So this is a really nice increase to see as it's up about 23%. Now looking at their net income growth, over the past 5 years, it is a little shaky. It's up from 5 years ago, but down from 4 years ago. So make of that as you want. The last 2 years, they have been able to increase in net income consecutively, so hopefully they can keep up with that momentum. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. So as you can see, it is up a little bit over the past couple years. I wouldn't consider this too much of a bad thing though, but it's definitely not good as you would like to see the company buy back shares. Moving into the balance sheet now, I want to take a look at their current assets. So their current assets are looking good as they've grown to 5.05 billion, which is an increase of 28% from 5 years ago. Seeing this consistent increase can only imply that this will continue to increase over the next couple of years. Now, of course, let's look at their current liabilities now. So as of 2021, they're at 3.73 billion. So this is an increase of 77%, which is a larger increase than what the current assets had. Overall, though, they do have 1.32 billion more in current assets, so nothing to worry about as of right now. Hopefully, we can see this grow at a slower rate in the near future. The last and one of the most important aspects to look at in any company is the free cash flow. As you can see, it's really good. It's always a good first sign to see that the cash flow is positive. It's even better to see that it's growing as it's currently standing at 1.82 billion from the 1.11 billion just 5 years ago. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. In conclusion, Dollar Tree has some really nice looking financials. Some criticism I do want to give is I want to see them hopefully adding in a dividend yield down the line. I would also want to see them start to buy back shares and improve on the consistency of their net income. Other than that, I like what I'm seeing from this company. I would say I probably wouldn't be too interested in the stock until it potentially drops back down to the low $100 range, which is around here. So I do want to make it clear though, before I end the video, that my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Anyways, guys, I want to point out that I am also not a financial advisor, so I recommend doing more research before coming to the conclusion of buying or selling the stock. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.